Hi guys, thanks for tuning in to another episode of Nuggets News. And today we've got a special guest, Kevin, who's one of the co-founders of Delphi Digital, who provide retail and institutional grade research on different tokens. So welcome to the show, Kevin.
Thanks for having me. Happy to be here.
I'm a big fan of your work. You've recently covered some of my favorite projects as well, which is great fundamental analysis. But for those that haven't followed, what's your story and how'd you get into crypto?
Yeah, no, appreciate the kind feedback. So basically, how we started. I mean, we all come from traditional finance backgrounds. We've got five co-founders, five partners, and we started Delphi almost a year ago now, which is kind of crazy to think about. But I personally came across Bitcoin really first time was in 2013 when you kind of had that mini parabolic run up, I guess mini compared to what we've seen, the last couple of years. And I, at the time, was studying, finance and economics. So I was very much kind of involved in the, I guess you'd say, investment space. And at the time when I first heard about it, to be totally honest, I just dismissed it. I thought it was, fake magic internet money. I didn't really do too much digging into it. And then a few years later, just by nature of some of the work I was doing, a lot of my friends, I kind of became the de facto markets guys. People reach out to me with a random stock pick, try and get my take. And a few of them actually reached out about Bitcoin, and I realized I didn't really know much about it at all. And so that was when I actually took a deeper dive into it. And this was probably, mid to late 2016. And the rest is kind of rock and roll history, as a lot of people like to say. They kind of fell down the proverbial rabbit hole, crypto rabbit hole. I mean, that's certainly what happened to me too. And it's one of those things where it's kind of it's not necessarily binary, but once you start to actually really understand the mechanics behind it, and just, again, me being a macro strategist by trade, just a lot of the qualities of what it was trying to do, or kind of the ethos around it, was certainly pretty fascinating.
Yeah.
So then started, investing small amounts here and there. So bought a little bit of Ether. Started to kind of play around with different, I guess you'd call, alternative crypto assets. Really more so in 2017-ish. And then when we were kind of starting to put, more of our capital and our time into this, fortunately, I was good friends with a few of my co-founders already. We'd worked together in our early parts of our career. We were looking around for a research shop that was doing something similar to what we were doing. I mean, I was doing equity research. A couple of my co-founders were doing equity research, and we just simply didn't find that for this space. And so we thought, if we really think that this market, this industry can grow to even, a fraction of the size of its potential, and you start to really do get kind of the more sophisticated investors, institutional investors coming into this market, they're going to demand a similar type of research quality as you would expect in, the public equity markets, for example. So that's kind of the genesis behind why we started Delphi, and kind of how we got here.
Yeah, and I guess the space in 2017, it was crazy. So, YouTubers with crypto in their name and making videos that say 100x, like that was the drivers of price. Whereas I guess we did fundamental analysis videos, and they don't get many views when you talk about the boring stuff, but it's sort of seen that space change and mature. So what's it like? Because it's kind of still frustrating, isn't it, that everything's highly correlated and fundamentals don't mean anything still?
Yeah, it's funny. Oftentimes, we'll joke around with some people about being fundamental analysts in the crypto space is kind of a misnomer almost, because it is, to your point. I memean, things are very, very heavily correlated. I mean, you've started to see Bitcoin kind of break away from the rest of the pack for a number of reasons I'm sure we can get into throughout this conversation. But to your point, a lot of the alts are certainly highly correlated. It's still very not only speculative, but such a small market that obviously very idiosyncratic things. It doesn't take a whole lot of buying or selling pressure to really move these markets, on top of, it largely being unregulated, right? So you have a number of different kind of factors. So anytime we research a project, oftentimes, we'll try and look for potentially some shorter term catalysts that could potentially, obviously, see some value accrual or price appreciation. But at the end of the day, I mean, we're really trying to find things that we think are either undercovered or misunderstood in some of our more thematic reports, which aren't necessarily looking at, token economic models or anything like that, just more understanding the technology. And then when it comes to actual token specific reports, we're looking for projects that we think, actually long-term could have some real potential, or doing some really interesting things. And, I would say probably 95% at least, a lot of the projects that are out there that do have a token, a lot of them are still kind of, hangovers from the ICO craze. We simply just don't think will accrue, any value really over the long term, just because again the mechanics that really power them simply aren't conducive to accruing value long term. So to your point, it's frustrating at times because again these markets move for random reasons. I mean, you can look at this week as a prime example, but at the same time it's also a challenge and an opportunity because we're trying to help kind of pioneer or push the needle forward in terms of how people start to think about crypto assets, especially if you're kind of more of an institutional sophisticated investor.
I think one of the best things about this space is that it was sort of retail driven first, and a lot of the cypherpunks got into it, because if I'm ever going to try and compete, and this was one of my frustrations when I kind of got interested in stocks, I just don't have an edge. I'm never going to be able to beat all the analysts who have got the the data feeds and all that sort of thing. But in the crypto space, if you find good projects, my belief is that at the moment we're trying to look for things that can just capture any % of different big marketing and industries. Like basic attention token is the example we always use because it's such a huge industry. We don't know what it's worth. So sort of what do you guys look at to determine what something is worth? Because it is almost impossible in this space.
Yeah, I mean, and again, we always kind of have that blanket disclaimer of, even something that has such a large network effect or following as Bitcoin, right? There's a non-zero chance that a lot of this doesn't end up working out. Yeah. And there's a non-zero chance that all of this kind of goes to zero. And we always, tell people, anybody we've talked to, that especially more conservative type institutions, this isn't a market necessarily. This is a market where you could easily lose your shirt for starters. And B, it's not something that we ever recommend putting a large allocation. If you're an institution, you're looking at a multi-asset portfolio, oftentimes just getting them, off zero or in a 1-2% allocation to crypto, even if it's a sliver of an alternative asset bucket, is a win in our book, right? You're kind of starting to understand the space, but at the same time, it's not such a large amount that, it's kind of make or break for you. But when it comes to looking at those different projects, we'll look for, and again, this is where it gets pretty subjective, but we'll try and, I would say we bridge a little bit of the old kind of financial models that we're used to when it comes to, because certain tokens you can obviously use like a traditional discounted cash flow model. It becomes a little bit circular and a little tough sometimes when you're actually getting paid, like staking protocols where you're actually getting paid in the asset instead of actually getting paid in US dollars or some type of currency that you can discount back in value. So that becomes a little bit circular. But at the same time, it's largely a supply and demand driver, right? So if you think about it as like a stock dividend or something of that nature, you can kind of start to bridge that gap. And it really helps when you put it in those types of terms and you're talking to, again, more traditional investors, because the moment you start talking about crypto assets and hash rate and all these types of things, it's very easy to watch their eyes glaze over. But if you can kind of bridge that gap and say, here's at least how you can start to think about that or put the framework around it, that's where we really start to have those in-depth conversations where people say, okay, I start to understand the potential use case for Bitcoin. I potentially understand, the smaller token project you guys are looking at. We kind of try and walk through in our reports right from the start to finish. Here's the industry it's trying to disrupt. Here's the industry it's trying to create. Here's what the potential, total addressable market is, the TAM is for this, similar to what you would see in a number of different kind of, sell side reports. And then we try and use some of those, blockchain specific or on-chain specific metrics, if they're available, to try and put some quantitative, numbers around adoption and, S-curve growth and things of that nature. And then we put out some type of scenario analysis and say, listen, even on a base case, small, even if it captures a very small portion of that target market, here's a 5x or a 10x potential opportunity. That's basically what we look for at the end of the day. It's more kind of the asymmetric upside. It could go to zero, but if it really hits and it really does take off, then the opportunity there is pretty tremendous.
Yeah, I think Bitcoin's sort of been spoken about a lot lately from all the different angles. Is there anything sort of new you'd add to the conversation? Because I think it might be a bit more interesting to dive into that big report you did on Ethereum, but I did want to cover Bitcoin first.
Yeah, no, I think the global macro narrative is really starting to pick up with it. It's something we've been hitting on for quite a while now. Just because, again, I view Bitcoin, certainly the technology, the blockchain technology itself is obviously fascinating. But at the end of the day, I almost look at it more as a monetary phenomena, right? Than more of a technical one. When it comes to some of these other tokens or smart contract platforms, Then you get much more into, kind of Web3 and what that potentially could look like. And that's more, on the technical aspect. But again, when it comes to Bitcoin, I mean, it's definitely has very similar properties to something like gold. And I think in the short term, short to medium term, probably the same drivers that are driving gold prices higher now are going to give Bitcoin a bid as well. Again, it's a very small market, and it doesn't take a lot of, like I said, of the liquid supply being as tight as it is, doesn't take a lot to really move that market. But I think longer term, I mean, it's certainly going to accrue value. And if it really does, the way we also kind of pitch Bitcoin is the option on digital gold, right? If it really does become some type of complement to a safe haven asset, or you certainly see the demand for censorship resistant non-sovereign assets increase, just with everything that's going on globally, it's almost a binary payoff, because the asymmetric upside is massive for Bitcoin, because it would have to accrue a ton of value in the trillions of dollars to, actually serve that kind of use case. So again, non-zero chance that it doesn't work, but right now the narrative for Bitcoin, I think, is certainly the strongest among, any crypto asset out there.
From someone that came from those traditional markets, I've had some great guests on recently, and I've been a bit surprised about how open they've been talking about that the banks are up to their old tricks, and things don't look that great. Not so much in the US, that's chugging along okay, but globally, and they think it is going to affect the US and the Fed. So are you sort of seeing a recession in the next 24 months, or do you think things are going to be okay?
I think a lot of it, the crux of a lot of the work that we've done recently, just from a macro perspective, certainly sits around the dollar, right? I think the U.S. can diverge from the rest of the world, but only for a certain amount of time, right? The U.S. can't grow or continue, the longest expansion we've had in history on record, and the rest of the world kind of collapse, and that not have obviously spillover effects in the U.S. In the next 12 months, I think it's a little tough. I mean, there's certainly a lot of talk recently about rising recessionary risk with the yield curve inversion and things of that nature. I'm very hesitant to obviously say this time is different, even though the incremental buyer of kind of the U.S. Treasury curve is a lot different. But I think, if we continue to see the U.S. trying to trade off kind of stalemate as those spillover effects continue to accelerate into some of these economic indicators that we're seeing roll over, I mean, a recession in the next 12 to 18 months certainly isn't out of the question. I think a lot of it, though, lies in the dollar, and that's, again, going to kind of push Fed monetary policy going forward. I think if the dollar strengthens from here, you could get, the market right now is pricing for, at least a 50% chance of at least 3 more rate cuts by the end of the year, which is pretty extreme compared to where we were, just at the end of 2018, where the Fed was still on a tightening path and hiking interest rates. So I think it's a very interesting time, an exciting time to kind of cover global macro. But I definitely sit in the camp of things are certainly more late cycle and looking like the recessionary risk is definitely creeping up on the horizon.
Yeah, I kind of think of it as I just don't necessarily see a black swan or a really nasty '08 style thing, but even if we just sort of go sideways or drift lower, it's kind of this slow unwind, and I think that'd be the best scenario for Bitcoin as an alternate financial asset, because yesterday we saw a bit of a crash and Bitcoin sort of got dragged down with it. I'd much prefer that calm scenario.
Yeah, no, and I think it's funny too, because us being, crypto analysts, when people, often reach out to us, especially earlier this year when you had Bitcoin kind of go parabolic, right? And that reversal from Q4 2018, that sell-off was almost as violent, right, on the upside as it was on the downside. Yeah. And people were reaching out saying, oh, business must be, great. And obviously things were going well, and you get more interest. And, obviously us being a research shop, business is good when prices are rising. But at the same time, when you're thinking about, skating where the puck's going to be and you want institutions to come into this space, a 100%, 200% year-to-date move over a matter of only 6 to 7 months is not an asset that they're used to, right? And it's unless you're betting on some emerging technology, growth, small cap stock, you really don't tend to see that, especially if you're a larger pension fund, conservative institution. So it's almost like the upside. I completely agree. I think the best case here is if Bitcoin just kind of, we joke around, slowly grinds higher, right? And then we don't see those parabolic price moves. I expect we're going to still see a decent amount of them as we grow, because again, it's such a small, for the amount that it's talked about and it's heavily debated, it's still a very small market, right? Which is fascinating to me, right? It's Apple has more cash on their balance sheet than the market value of Bitcoin, but obviously it's the reason why we're all here. So I think the best case scenario certainly is slow grind higher, kind of you start to weight institutions in. It can be seen as, a portfolio hedge and uncorrelated asset and all those types of things. And I think, I totally agree. I think that's the best case. The black swan event for traditional markets, I think could potentially lie in the corporate bond market. There's been a lot of work done there. Just the amount of debt issuance and kind of that very thin line between investment grade and junk right now. I think if there's any black swan, it'll probably be there. But again, that's probably not, 3 months from now. That's probably more the 18 to 24 month out.
Yeah. So switching gears, I want to dive into that great report you did on Ethereum and I guess talk about it as a general level from the other platforms, because once we've got a lot of these having proof of stake and an annual yield, I think it does offer a lot more value to investors, particularly in this negative interest rate environment. Mm-hmm. And I think Ethereum particularly, or just the general rule of thumb, the higher the market cap, the less sort of risky, I guess you'd say, the asset is. Imagine if Bitcoin was paying you a great yield, a lot of people would be attracted to that. So do you see that as really important? And that research you guys did was just fantastic about proof of stake.
Yeah, no, appreciate that. We certainly see it as important, right? Because again, when it comes to investing and maybe there's some pushback there because we do come at this entire space more from an investing mentality. We certainly obviously buy into the ethos. We think there's some incredible products out there doing some amazing things that will not to sound too corny, but will actually make the world push the needle forward and make the world a better place. But at the same time, we come at this again because our client base is much more kind of investor focused. So we do come at it from an investing standpoint. And that was one of the kind of big hurdles that we were trying to get over when we came to not only kind of the transition to ETH 2.0 and that all the things that have to kind of go right for them to be able to roll that out in the relatively short timeline that's been projected. It was also, okay, once we get there, and especially if you're gonna have to lock up ETH for a while, what is that opportunity cost of holding it there? Can you go into some type of DeFi platform, let's call it 2 years from now, and get some type of either comparable yield that's more, there's nothing risk-free. Obviously there's no free lunch, but it's a little more risk-free, so to speak, or risk-less. Yeah. Having those types of trade-offs, right? Because again, altruistically, there's probably going to be a decent amount of validators that would do it and even operate at a loss. But again, when you're trying to think about it from a long-term investing standpoint, you have to have that. You have to be able to compensate people for that kind of opportunity cost of capital.
Yeah, and I think that's something that they're still playing with at the Ethereum Foundation as well, because they want to reward people maybe early on, and that was something that you guys suggested as well. But anything else that I guess you think is important for people at home that are doing their own research, or I'll share the links to the institutional stuff that you guys do as well for the higher end of the spectrum?
Yeah, no, I mean, I think obviously, do your own research for sure. And I would say what's impressed me about this market too is that it's very polarized, right? If you go on crypto Twitter, you'll see, polarization when it comes to, call it Bitcoin maximalists versus ETH maximalists and everything in between. But there are a lot of people out there that are genuinely open and very personable and approachable that you actually don't see in other markets, right? So the fact that we can do research on a project and get on the horn with their head developers, get on the horn with their CEO or co-founders, and they're as excited to talk about their project as we are to research it. I think it's a very kind of unique. We're all in this together kind of camaraderie in this space. So I would say if you're interested, if you're kind of personally investing in a space, obviously definitely do your homework, do your digging, try and figure out how you think this thing could potentially long-term accrue value, for starters. But also reach out to people. Don't be afraid to reach out to the teams that are building this out, because oftentimes you'll be surprised at how responsive they are and how appreciative they are that you're even giving them their time.
Yeah, I guess that's probably a final question. And I know for me personally, we sort of got to that level, and after crypto winter cleared out a lot of the crap, that people are very approachable, and it's something that it just doesn't happen in the traditional world of finance. You'd never be able to get on the phone to Jamie Dimon, or these guys aren't even on Twitter. So do you think that's like a sort of social change, a demographic change that we're seeing about, I guess, transparency in the world of business and crypto assets?
Yeah, and the transparency aspect might even stem from the fact that if you take the OG blockchain, right? If you take Bitcoin, the fact that a lot of the work that we do for the UTXO analysis, for example, is something that pretty much anybody, it's obviously, it takes a little bit of technical expertise to be able to pull that information, but it's accessible to anybody, right? And that you don't have that level of transparency in a lot of other market, really any other market, especially when it comes to something like publicly traded equities. And again, to your point, you can't get Jamie Dimon on the horn and ask him about, what his plans are for, JP Morgan. So I definitely think that it's a very unique space because a lot of the best ideas, thought leaders, and research, to be honest, comes from not only, people like us who are trying to provide that, but also, Medium, Twitter, Reddit, these different kind of social media platforms that, again, traditional markets, you really don't see heavily used. And you're starting to see a bit of a transition where you're getting more people on kind of financial Twitter and things like that.
Yeah.
But no, I definitely think crypto, that's actually what's pretty cool about crypto is it's very much leading, on that side of things.
Yeah, I think just to finish off on something that I think is super interesting, that those suggestions that rather than these games that they play on the stock market of the quarterly reporting cycle, and whoever can get access to that data first and has the best connection to, with high frequency trading, there's talk about having all this stuff just transparent on a blockchain, and you'd get real-time data about sales of iPhones, for example. So there's not really one moment in time where an analyst has more of an advantage over another. So I think all those things that you spoke about with pulling data from blockchains is going to change the world of traditional business as well.
No, I totally agree. And I think, to be honest, final point is, I think just the world of investing is becoming certainly more bifurcated, where you have, again, the HFT, the HFT people where, that's obviously a very, very fast, we're talking nanosecond type market. I think the only kind of arbitrage you have and getting the edge, again, because public equities are, such a large market and so efficient relative to other markets. I think time arbitrage is honestly, and that's the same way we approach crypto is we're trying to find things that we think will be able to stand at least, the test of time is maybe a little exaggerated or dramatic, but having that kind of longer term time arbitrage, I think is one of kind of the last edges that people will have, at least in more efficient markets. So no, I totally agree. I think it'll be interesting to see the quarterly reports and have a lot of that information potentially in real time. But at the same time, it's definitely going to pay off, I think, as being kind of a long-term oriented investor and trying to think, next level or two levels down of what the knock-on effects of a lot of this stuff will be.
Fantastic place to finish, and I'll put all the links to follow Kevin and the Delphi guys. I suggest you check out their free research and their premium stuff as well. But thanks so much for joining us today, mate.
Appreciate it. Thanks for having me.
Cheers, guys.